Okay guys, welcome to today's video. This is day 80. Wow, we've gone a long way. So guys, today we're going to be talking about the common market structure mistakes a lot of traders make, we make sometimes in SMC, while trading SMC, right? So these mistakes may be common and they are basically the basic things, right? You know, when we get into advanced technical analysis, right? In SMC, most times we forget the simple basic things. So if we should not be overwhelmed going to advanced understanding technical analysis and all, right? Because it's you still make money from obeying the simple basics, right? And forgetting those basics is actually some of those mistakes we make, and it usually affects us, right? Because of the simple things that you know these things now, you should know these things. If you look at the chart, why you not see it? Because you are actually concentrating more on the advanced things, the liquidity and everything, right? So I think one mistake is understanding what a break of structure and a change of character means. That's one mistake, right? You should know when market is breaking structure. You should know when market is what changing character. And whenever, of course, we're talking about market structure mistakes. Whenever we are talking about structure, always look at there are two structures. I've talked about market structure. We have internal structure and external structures, right? And there's what we call higher time frame structure or dominant structures. Right here it says trading against dominant structure or dominant trend is also a mistake. We'll talk about that, right? So whenever you're considering a break of structure or a change in character in market, you need to understand the story that price is actually making, right? So that when you see a break of structure, you don't call it a change of character, right? And when you see a change of character, you don't call it. It's even better you call. You can be calling everything break of structure, right? So it's better you call it break of structure than call it mistakenly call it, right, change of character, because that's where you'll be taken out. Okay, because if market shifts character, it means market wants to reverse from a particular trend. If market's in an uptrend, there's a change of character or a market structure shift. It means market is want to change structure to the downside, right? When the market is bearish and market wants to go bullish, market change character. The character of the market change from what bearish to bullish. That's how the market behaves, right? So what break of structure occurs when market is actually in a current trend. Change of character is actually the first move from an uptrend to a downtrend. We also call it market structure shift, right? Now, when I'm talking about this now, right, on external structures, internal structure, you would see a lot of break of structures and you see a lot of change of character. That's why we can differentiate change of character with market structure shift. Market structure shift might be a shift on higher time frame, right? Might be a shift on the market, the main structure. Why change of character can be because if, for example, this market is in an uptrend, right? And of course, markets on this particular trend on smaller time frame, market would be also making moves like this internal structure moves, right? Then for market to make a retracement on smaller time frame, market will change character. Now on that move, it's a change in character, right? We can say it's a market structure shift on this time frame, not on the entire time frame, or a change of structure. Some people would say no, it's just a change of character because market is just retracing. While it's now a market structure shift when market wants to entirely move, right? This one now on higher time frame is now called the market structure shift because market is changing the overall, the major trend from up to down, right? So I believe you. Let me even add that. Okay, so let me add verse. It's also a problem. MSS. Okay, so you just need to understand the concept. Okay, when we say market structure shift, market is shifting the overall trend, but most times I can use market structure shift because on the time frame, because I'm currently on a particular time frame, right? On a particular time frame, right? So I believe that should explain it. I've talked about it seriously in the past when we're talking about market structure. So we just want to confirm the mistakes. Now, a lot of people, now where does this mistake destroy traders or affect their particular trade? Whenever you're seeing a change of character and you're calling it a break of structure, right? You're seeing a complete change of character and you're calling it a market is trying to break structure, or you are seeing a break of structure, you are calling it a market structure shift, right? It affects. So understanding how to identify them are some of those mistakes, right? Especially for newbies. So you need to understand it. I don't want to spend much time explaining what a BOS means, a market, because I've done that on previous videos, right? I just want you to know that these are common mistakes that may affect your trade. The reason why, whereby you are seeing structures and you don't know which one is when market is making a retracement move, right? When market is creating a break of structure to the downside, you are calling that a market structure shift, or market just create a minor structure shift and you're calling that market structure shift when it's just a retracement move, right? Then before you know what, you're stopped out, right? So you must ensure that you are able to identify what this means. Okay, now confusing retracement for reversals, very very important, and you are affected by this if you don't understand the overall market move, right? When market is retracing, then you say, oh, we are bearish now, or we are bullish. How would you avoid this common mistake? How do you avoid this mistake? Is by understanding, okay, maybe we can say a good, maybe we can say good example. Fine, beautiful. Now, this is a good example here, a good example. Now, when market pulled up from here, or market made a move up of here, right? The mistake says confusing retracement for reversals, right? A lot of people will think that price has reversed because, of course, this is a long-term buy, and we have taken out a high. But this move, right? If you now understand the previous structure, you see that, oh, market created a clean break of structure here on the downside, right? So all this move that was bullish. So if you're not on higher time frame, you'll be seeing this pump because it took some days for this move to happen. So if you're not on higher time frame, you will not know that, oh, this movement to the upside is just a pullback, not structure shift. The market is still what? Bearish. So market did not actually reverse completely. Market was just making a retracement move. So on this structure, market might be retracing. But if you go to smaller time frame, say you're in the 1 hour time frame or 15 minutes time frame, you're not looking at it, you just look at, you'll be like, market is buying now. You'll be seeing buy, right? It happens every time. A lot of the times when market makes those moves, you will think market is creating bullish move, not know, or bearish moves, not knowing that it was just a retracement. And if you can identify retracements from reversals, you'll be very good in catching beautiful setups, right? Now, for example, a lot of people would have caught this buy, caught a buy setup from this guy, this range, right? And this will be serving as engineered liquidity, right? If they are not seeing, if I'm on this time frame, this is what I'll be seeing, right? Because our market made a high, a low, coming back, there's fair value gap there, or I won't call this imbalances right here. What you'll be expecting, since this guy made a bullish pump, I would be saying, oh, market wants to continue going bullish, right? But what happened? This move here was only but a retracement, right? For price to get into this level of imbalance and continue selling to the downside. Then what will happen is a lot of buy traders would be here. They would not even want to go to a higher time frame. Let them see the pattern. You just be here selecting every demand, and you want to be buying from every demand. They'll be putting buys here, right? They'll be putting buys all here, all here. Then what happened? Market will just be taking you out. Look at what happened here. Let me make this clean, right? You can see this is a demand zone, of course, market buys, but it was just a retracement, a pullback for sellers to enter, sold aggressive to the next demand, right? Market got into this demand level. What happened? There was just a little bit buy, right? For market to just create. So if you're looking at this momentum here, that because market is buying now and has bounced from a particular demand, and we are bullish. No, you are taking what? A retracement move for reversal. Then what happened? Market came, take this buyer out, right? Same thing happened here. This demand zone, you are buying here. Then you be buying and you be bullish. And when you enter the trade, before you know it, what happened? Market will take you out. You keep it in stop loss. While people who have seen the structure already would be positioned for every pullback to be catching sales. You have caught a beautiful sell here. You would have caught a beautiful sell here. You would have caught a nice one here, a nice one here, and one here again. Right? So understanding this thing, it really, really helps. Right? Understanding market structure helps. Right? Now, same scenario now. Remember yesterday when we talked about when we did the weekly analysis, I was telling you guys that BTC can make buy momentums from this demand zone. There were two things we could see from BTC, right? We could either see the weekly candle open, right, and we get aggressive dump, or the weekly candle open, the new week opens, and we maybe see market going into higher levels before a continuation. Why am I saying there might be a sell continuation? If you look at the structure very well, right, it's almost still the same thing. Lots of people would be here. Let me bring this down. Okay, lots of people, of course, you can see all these several demand zones that market bought from. They were just serving as a pullback. Market made a pullback from this demand zone, sold, right? We saw a sell continuation right here to the downside, right? So same thing can happen here. Why? Higher time frame structures has told us that the market is moving bearish, right? This guy here bought, right? A bought. So market might just be making a similar pullback. And if you're a kind of person that do study your market very well, right? But a lot of people looking at this move, they'll be like, BTC is going bullishly from here. For me, no. Why? Because we have analyzed on the weekly time frame, and we have seen a sweep here on the structure, and we have also seen a market structure shift here. Right? Market has changed structure, right? Market bought to this demand or supply zone. Sorry, that's a supply zone, right? And we see, even if the market remains 3 hours for the weekly candle to close, you can see the bearish setup right here. So any pullback we might be seeing here might just be a pullback into good sell levels for you to catch good trades. So we will not be overwhelmed that, oh, because market is buying from this demand, we want to target. Except the only way we can start buying higher from here, except there is maybe a bullish news momentum coming to the market, and market now decides to buy here. And when we see it close above this region, right, above this region, we'll now say, oh, what happened is that market has created another shift. Then we'll go long for a pullback and a continuation, right? But if that does not happen, we are still bearish on this. Whatever pullback, market was just trying to make we have seen several, right? You can go to the chart and study several ways market has done that move. You can see the one that happened here, sold all the way to this side, then there was an aggressive pump. Everybody was like bullishly, what market was respecting the bearish structure, and we saw a continuation. Look at this again. There was a bullish momentum right here, sold, we saw a continuation till market taps into a strong level of demand, right? Then we now saw a what? Shift, right? And this shift took out a particular trend line on higher time frames. Then we now know that we are bearish, continue buying with the market. So that's how quite easy understanding structures is, but you must perfect it and know how to see it very well. It's going to help your trades. Where is my drawings? Where are they? Where are they? Where are they? I cleared it. Oh my god. I cleared it. I cleared it. Okay, the next point there was the next point is ignoring higher time frame structure. Of course, we have talked about this severally. Before you analyze any chart, you must, for day traders, of course, whatever analysis you want to do, carry it out on the 4 hours time frame. Right now, you can do your top-down analysis from the monthly chart, the weekly, identify high time frame key levels and support levels, resistance level, identify them. But now, when you want to look for SMC setup, you must make sure that you are seeing confirmed structure shifts on 4 hours, either with a candle confirmation or a structure break or shift confirmation. Once you see that, you're targeting imbalances on the 4 hours time frame, you're targeting liquidities on swing highs and swing lows for your take profit. Make sure you do that, right? That's one mistake. We just go to 15 minutes time frame and analyze charts, because why? We are desperately in need of a setup. Then once we rush there, boom. Okay, so be careful with that. Now, trading against dominant trend. You're trading against the trend. You're trying to fight it. Market has not broken structure. The thing is, when market was selling all the way from here to this place, right? For market should have gone bullish on this particular time frame, right? Because of course this is a good demand level, that supply level. Why am I calling demand? Supply level that markets sold from, and there was a form of liquidity. The market sold but could not take out this high, this low. When you see moves like this, market has tapped into a demand, a supply, right, or a demand on higher time frame, and market cannot take out the particular low. You It will tell you that market is about to change structure. It means we don't want to go bearish from this trend. We are about to move into higher levels, and that's what happened here. Because on this region here, there was a beautiful SMC setup that played out, but it played out not completely. Why? You can see a particular high that has broken structure to the downside, right? Clean break of structure, and this high also swept liquidity. Valid, right? On this particular high, on this other block right here, there was a form of engineered liquidity also. So when market came, market sold, right? Proper things, you would have been in profit. But now you'll be targeting lower levels of liquidity, because if market sold from this place to this place, if market should want to continue, you don't know the move, right? Market should at least come and take out this, right? Market should at least come and take out this low, or this current one that pushed market to that level. But what happened here? You saw market selling. When it comes to this particular place, right, there was a strong support. Then what happened? Market decide to what? Aggressively buy. So when you see this kind of move, market could not take out this guy. It came back to this imbalance that was a good level for a continuation, but took out the imbalance. This is a move. So when you see a continuation from this move, now this form of reaction tells you that this guy does not want to sell again. Market wants to shift, and that's what happened here. Before you know it, market shifted from here, and of course lots of buy opportunity appeared right here, right? So but lots of people now would be trading against the move, trading against the trend. Higher time frame structure trend is telling you that market is bearish or market is bullish, but no, you do not want to wait for confirmation, right? You do not want to wait for confirmation. You just want to go in aggressively. So that it's also a common mistake we should not neglect as traders. Write them down, right? Finally, we'll talk about relying on trend lines instead of SMC structures, right? I really hope you guys can take down those points. Relying on trend lines. Trend lines are beautiful tools. Of course, if you guys remember my day, is it day 4, day 5, when I was talking about the what's it called? Getting directional buyers using key levels and using trend lines. We talked about using trend lines, right? But you should understand where smart money, how smart money traps trend line traders, especially. I think for you to know this very well is by going to watch the videos of where I talked about how not to draw a trend line, right? Lots of people do not know how to draw a trend line, right? A trend line, any point you pick for a trend line must be a swing point, and a swing points are points that actually broke structure, right? If there was no a confirmed structural break, those points cannot be regarded as a swing point. You can see this swing high to swing low. This is swing points. Swing high to swing low, broke structure to the downside. I can consider, right, drawing. Now, if I see someone, a market move like this and comes here, I'm not drawing this as the trend line. You see what people would now do? They will now what? Mark here like this. They'll say this is a trend line. Okay, they'll say this is a trend line. But this guy did not create a break of structure. So it is not. Then what will happen? They'll be selling. The market will just make moves like this. Then when market makes move like this, right, the traders will say, oh, Market has broken out from the trend line. But no, this is not a swing point. It never created a break of structure like the rest, 1 and 2. But you see, traders will now put it very well so that it corresponds to this one. And when market makes a move like this, they will say market has now broken what? Structure. Then all of a sudden, they'll be waiting for a retest on the trend line to catch buys. Then what happened? Market sells like this. They'll be like, but then you now see a swing point will now be created. They'll now be saying, what happened? Market book out the trend line and reclaim the trend line. No, what happened was this was the obvious place market wanted to create the swing point from, like this. So you entered wrongly. Okay, so you must understand this, right? So smart money actually use those trend lines to trap people. So at that particular point, you should not use only trend lines, right? You should not use only trend lines for that confirmation, right? A smart trader will be looking at, oh, this might be a pullback, right? This move now that tapped this trend line I was drawing might be an inducement move. It means market maybe wants to what? Come into higher premium levels for a sell, right? Means market wants to come to high premium levels for a sales before making a pullback to the downside, and use this area where lots of trend line traders has entered from as what? Liquidity or inducement, right? Making them to enter the sell early, then taking them out. After taking them out, making them to come back to buy. Now of course they will be selling, the market will stop them out. Now they'll think that since they've got a stop loss on their sell, they'll think that market wants to retest the trend line and buy. Then you see what market will take them out again on their buy. So they sold. You see a lot of people say, I sell, market stop me out. I buy, market stop me out. Which one? These are the simple traps markets use on using structures, right? So these are common mistakes. We may not see it often, right? We don't see it often because we're really overwhelmed with the advanced um, technical analysis that we forget the simple thing, right? These simple things. It's important we do that. So that will be all for this video. Thank you very much, guys. I hope you learned something. The market is moving well. Funny enough, I didn't catch any buy setups. Funny enough, even if I were to catch a buy, I would not now because of the way market is moving, right? I want to see market reaction. How the day close will matter. Then how markets, of course, on the daily time frame. Before market would, I have a. Let me just give you guys some tips here. You'll be having, of course, this is a good sell side order flow as point of interest. This is also a good neckline, and of course midpoint of that imbalance if price want to use this as liquidity, because this pullback was incomplete. So I would wait and see how market reacts on this order flow region. I think it corresponds, or good, it corresponds to also the 4 hours order flow. So I would want to see how market reacts here. If the reaction is good or strong, then I will be also taking notes on the demand, the new level of demand market created here. So I have 2 levels now. So it means I can catch a sell and also a buy. So if the reaction from this guy to this sell P or buy PI is not aggressive, right? I would maybe catch a buy to target this liquidity, because I consider this high as a liquidity region, right? Good, and this region here has a strong supply also. So all those things, now we have regions or areas where price can react. All we just need to do is to wait for the reaction, then we can catch good trades. Don't need to force it, just allow the thing play. But you know what, a lot of people like, oh, market, I missed the buy. What buy did you miss? Market has been ranging, and all of a sudden, what buy setup did you miss here? Nothing, right? So allow market do its thing. Then when it shows you an opportunity, you jump in. Okay, so that'll be all, guys. See you guys on the next one.